Let's quickly go through the important news of this week and see how it can affect gold prices. Monday, we start with the FOMC report. It's medium impact news, but it can still move the market. If the Fed sounds soft or dovish, gold may rise. If they sound strict or hawkish, gold can drop. Tuesday, a busy day. We have flash PMI, flash services PMI, then the manufacturing index, and later Fed Chair Powell's speech at 8. These events can bring strong moves. Good U.S. data or a strong speech from Powell could push gold down, while weak data or dovish talk could push gold up. Wednesday, only one report, new home sales. Not very big, but still important. If home sales are weak, it may support gold a little. Thursday, this is the most important day. We'll get GDP numbers, unemployment claims, durable goods orders, GDP price index, and existing home sales. If the data is strong, the dollar may rise, and gold could fall. If the data is weak, gold may get support and go higher. Friday, the week ends with the core PCE price index, the Fed's key inflation report, and the consumer sentiment report from the University of Michigan. High inflation usually helps gold, but strong consumer confidence may limit gains. Looking at the H1 chart, DXY first grabbed liquidity from the discount zone and moved up. Right now, it's pulling back inside an ascending channel. Just above this point, we have a bearish engulfing candle and an order block. If the market rejects this area, support is likely again near 97.00. That's why I expect DXY to stay bullish for the next 2 to 3 days. But after that, it may turn down. On the daily chart, the bigger trend is still bearish. Yes, we've seen a strong 3-candle push-up, but the market hasn't broken the last high. This means rejection from the selling zone is still possible. In that case, DXY may bounce from around 96.80 before turning lower again near 98.60. Remember, 98.60 is the key level. If we get a daily close above it, DXY could show strong bullish momentum. On the weekly chart, the trend remains bearish overall, even after last week's sharp recovery that came right after the Fed's rate cut. Still, if next week even one daily candle closes above 97.70, DXY could try to build further upside momentum. Gold weekly and daily outlook. Let's talk about gold, which everyone is waiting for. Weekly overview. Last week, gold made a high of 3,708 and a low of 3,626, and the candle closed in a very neutral way. That means the market is balanced, with less chance of being overbought right now. For the past 1.5 to 2 months, weekly candles have been closing bullish. If you remember, in the first week of September, we saw strong momentum along with a weekly gap. Now, gold may pull back a little from here because this is a retracement zone. On the support side, the important levels are 3,611 and 3,581, as well as the 3,551 retracement zone. On the resistance side, the first key area is 3,708 to 3,712. Here, partial profit taking is smart. If we get a daily or H4 close above 3,712, then the market can push to 3,740 to 3,750, and even 3,780 to 3,800, which are major long-term resistance zones. From these levels, we might see a big rejection or dip. Daily overview. Looking at the daily chart, the RSI is around 73, which means gold is overbought. So the market may either move sideways for a while or dip slightly before going higher again. I've been saying this before. As long as gold does not close below 3,600 to 3,590 on the daily, there is no strong selling pressure. On Friday, the market trapped many traders, first showing bearish momentum, then quickly reversing upwards. This was a fake breakout, and it shows how market makers play against retail traders. Right now, the daily candle is strong and bullish, confirming that buyers are still in control. Summary. Weekly is still bullish, with support at 3,611 to 3,581. Resistance levels to watch, 3,708 to 3,712, then 3,740 to 3,750, and finally 3,780 to 3,800. Daily RSI is overbought, so a small pullback or sideways move is possible before any bigger push higher. So, gold is bullish.